people have been locked out of coins. Now, I don't know about you, but I mean, I'll never be locked out of my own home.
Are in Las Vegas this week for Bitcoin's flagship event as the coin surges back toward its all-time high.
But as Crocodile Dundee would say, that's not a bubble. This is a bubble.
Real action is on chain with stablecoins poised to power 24/7 equities trading.
But is it a speculative bubble at all? Or is it just a sign that the world is changing?
My view on Bitcoin in particular, we'll start with that being the biggest, is not yet a storehold of wealth or a medium of exchange. And people will argue that, but it's not. It's a storehold of wealth and a medium of exchange. So they're the two key things. Having said that there's 90% of the coins are in existence, and 10% no longer exist. BlackRock and the likes, it doesn't get any bigger than BlackRock, 18 trillion US. They've now embraced Bitcoin. So have Morgan Stanley and a lot of the majors there, Goldman Sachs. But it's interesting is that I'm a big advocate of the security and the keys and the coding to the actual access to the coin. I don't tolerate or would stand for or would never advocate ETFs, any form of index or anything synthetic on Bitcoin, or anything for that matter. I think ETFs are rubbish investments. They're a derivative, they're a synthetic, they're not actually title. And what I mean by that is, if you've got a title of a home, and I take an option out, or I buy the index to the residential index in Australia, I'm buying an index on an exchange. I don't own the title at the titles office and have a folio and volume number. That's a lot different to actually taking a bet on the index opposed to owning owning the folio and lot number and volume number. I think that with Bitcoin itself is certainly the limited number in circulation or production, and the security and the keys and the access to Bitcoin itself, I think is going to be, everything will be predicated on the security of the accessibility of Bitcoin. Everything else has been hacked and and that's not to say that Bitcoin can't be hacked either, but that's the key there. If the security is maintained, that potentially could be that and gold, the new cornerstone for currency. So am I still sceptical? It's hard. You don't have those issues with gold. You still have the liquidity with gold. There's no dividend with gold. There's no dividend with Bitcoin. I can borrow on gold. So I guess, it's something that at the same time, I don't see it complicating. It's a complicated asset anymore. It'll only be as strong as, a bit like a balance sheet of a business. It'll only be as strong as the security, and if that is not compromised, and this is not advice, that Bitcoin, the way it's moving, there's a lot of theories that it could go to $1 million. It potentially could. The question is how long will that take? But that doesn't necessarily mean that you throw the house at it either. So, it's something in the defensive portfolio of, say, a 30% of fixed interest, treasuries, bonds, gold and silver. And Bitcoin, I would say, dare to say, would have to be considered in a defensive portfolio. Well, the risk is there. I mean, the way people we call it, legal hot tubbing. People talk about, they've got all these theories with no new evidence of Bitcoin, and the market gets caught up in it. It's been floating the last 10 days around about 167,000 to 170,000 a coin. But as far as it's something that needs to be kept in its place, and so if you understand it, we understand it. We think that in a defensive portfolio, it's between 7 to 20% at most. I think we're a long way away. Look, one thing that we're about to make public, we've now, to go and get exposure to Bitcoin today, you've got to, or to buy the coin, not the ETF, you've got to spend $170,000. Or you can go and buy the ETF, but if the exchange or the issue of that ETF fails and runs to a level where it's insolvent, can't trade that exchange, that means that you actually own a piece of paper and a promise and have no title over the Bitcoin. That's why ETFs mean nothing to me. It's like you might as well give me a beer coaster, an IOU. So that's the problem. What's interesting at the moment, and look, very few people are aware of, and I'm talking very, very few, in fact, I spoke to 20 institutions in the last 4 weeks, and there were 2 individuals that knew something of what I was looking for, and I found it, and we've now set our own corporate trading account up to buy options of Bitcoin. Now that's different to an ETF. So for $8,000 for a year, I can spend $8,000 out of my pocket, where someone else might spend $170,000 to buy Bitcoin. If Bitcoin goes up, my $8,000 goes up. So I don't own the physical coin, I've got an option, a right but not an obligation to buy. But the option is linked to a physical key to the coin. If you buy Bitcoin, you own the coin. But I can go and buy 20 times that with the same amount of money, and if Bitcoin goes to $340,000, doubles, my $8,000 goes to $178,000 of value. So the profit is identical. But if I spend $8,000 and someone spent $170,000, the leveraging capability is so much greater. Turns out, after speaking to a lot of people, I'm talking some big names, the biggest in the country, 3 in the US, there's only about 4 institutions in the world that actually write Bitcoin options. Now, you won't hear it from advisors, because advisors can't give advice on Bitcoin, period. It's not covered under PI, so you don't hear it in the retail market. Wholesale, well, it's an unregulated market, the wholesale market, wholesale advisory, because there's no regulations, and it's a bit of a cowboy space, I think. We don't operate in the... And then you get to the ultra high net worth. So you actually now are able to, and this is more institutional level, so it's a $100 million security bond you've got to have to put up to be able to trade options. Natural people don't have that, of course, but that's the only thing I've found that that we would be looking at because the risk is so much less. If Bitcoin vaporises and I spend the $8,000 and someone else spends the 170, I've lost 8. If it goes up like everyone thinks it will, I ride that wave, but for a smaller amount of money. So if we buy BHP today, and we spend $100,000, I can buy the same amount of BHP shares for the next 6 months, lock in the price for $3,000, and just hold it. BHP itself. And if it goes sideways and doesn't move at the end of that 6 months, the option's worth 0. It's not worth anything. I lost the money. But if it goes down, I would have lost the money. But if it goes up, that option price increases. So that for me is because you are spending a lot of money to get into the asset. And I think with the speculation, I mean, it's not something that it's the only digital currency at the moment that has weight. But I think it still needs to be kept into perspective, and I'll always be a skeptic. I've been a skeptic on currency, equities, my own money. I'm always concerned about what can go wrong. A lot of people don't think about it, Who would have thought that, even in Victoria, Melbourne, the most livable city, real estate's gone sideways generally for the last 3 or 4 years, sideways. In some cases, it's gone south. The people that have done well on it, I mean, you take your hat off to them. But I think what I'm seeing out there, and I do feel for them, I think the people that have done well, or the people that have lost, most people, from what I understand from the ATO's data, have done well on Bitcoin in recent days. I think there's been more winners than losers. But the concern, I know of a few people that have actually sold property and gone into Bitcoin, their own home, because their business wasn't doing that well. They decided to buy and spend a lot of money on. I'm talking, $1 million, and that was 4 or 5 years ago. They've done well, and they've almost given up work to do that. And I think that because they think it's going to go to, $5 million coin. So I just think it needs to be kept into perspective, because things happen. And I mean, we could be sitting here doing an interview like this in 3 years' time, and it's worth fivefold. And it might be the case, but here's how much risk do you take? And what's the level of risk? And the discipline is, if someone on their investment portfolio, I would say you might be tempted to go all in, but I'd say to anyone, a balanced investor, that it's probably between 3 and up to maybe 20% at maximum. I just don't feel that, because things can go. People say, "Oh, it can't be hacked." What the threats are is other stable coins and other digital currencies that come onto the market that are regulated and become storeholders of wealth. People say, "Well, that won't happen." Oh, really? Well, okay. It can happen. And gold was the backing of the US dollar right up until 1971, and it got pulled when Nixon pulled that, and the dollar's been devaluating, but it's still one of the strongest currencies in the world, still, the US dollar. And the reason why it's held up is because they're printing so much. Anything would hold up if you keep printing more of the same. But the way they're talking now is that when the US dollar does eventually collapse, it goes to zero, like most other currencies have, Bitcoin will be standing there. I don't believe that. I think there's other forms of digital currency that will be. They won't be the only one. That's what I think.